Well, the US market was hit by a combination of poor earnings results for the third quarter there, apart from Apple, which reported the largest quarterly profit of any company ever in history, thanks to the iPhone 6, as well as some weak economic data. So the main US index there fell more than 1%, and Apple shares fell as well. The German market fell after 8 rises in a row, and there's not a lot of joy among Greek investors yet either. So the Australian market's small rise today was a bit of a surprise, due mainly to small gains by all of the banks, as well as solid ones by Crown, Qantas, Medibank and Telstra, which hit a new 13-year high. Woolworths had the biggest fall among the leaders. There was another big drop in the oil price last night, as well as copper, but the gold price continued to climb. In fact, there's a bit of excitement around about gold at the moment because it's climbed from $1,200 to nearly $1,300 an ounce since the start of the year. But this graph suggests that it's a bit early for the gold bugs to be breaking out the champagne and house hunting on the harbour. Gold soared in 2010 and 11 because of fears about inflation, and it collapsed in 2013 because inflation didn't appear. Now there are fears about deflation, and the gold bulls reckon it's a hedge against that as well as against inflation. But I think the jury's still out on that. As you've heard already, there's no inflation or deflation here, and it's not just oil and petrol bringing the CPI down. The prices of toasters and kettles are the lowest ever, and women's clothing is the cheapest it's been for 25 years, depending where you shop, of course. The dollar seems to be settling below 80 US cents, although it had a run at 80 today and is slightly stronger tonight. And that's finance.